Hi there, I hope you're doing well. In this video, I'm going to break down narrative, draw on liquidity, and context. The model gets you in, the narrative determines whether you hold. The draw on liquidity is your target. Know where price is going before you look for an entry. The narrative first. Narrative is the story of price. Where is price coming from? Where is it going? Where is it going to go? And why? That is basically the narrative, is basically the bigger picture of the market. Um, Without narrative, every sequential SMT looks equal valid. Yeah, equal valid. With it, you filter out 70% of the noise before you even look for an entry. Now, this is the beautiful part. For your bias, you want to be sure and you want to filter out the noise, which is the 70%. Most of it is all the noise. All you want is the real structure and the real narrative, so to say, the real bias, in order to to see your real bias and then um look for an entry. Full sources of drawn liquidity. First, previous X high on low. Could means previous session high or previous day or month high or low. Primary targets. That means you're targeting basically either previous session high or the day or the week, etc. or the low. Always mark them. And yes, guys, especially previous day and high and low. Second, unmitigated gaps, fair value gaps that haven't been returned to. For example, let's say if you know what a breakaway gap is, sometimes the market tend to not enter a breakaway gap, but later on, within the next day or next session, whenever in time, the market will tend to return to that gap. Price gravitates towards open gaps. Yes. Third, time-based premium discount. Previous higher time frame quarter range, above 50% equals premium. Below equals discount. Guys, this is simple. Let's say we have a range. Let's say we're in an uptrend. What you basically need is your deviation, standard deviation, and look, where is the midpoint, right? Maybe somewhere here. So let's say we're trading here. What is your bias for the day? It's too premium. It's too expensive. It's too high to go longs now. What you want is your day market open. You probably want to target the equilibrium, the midpoint, and vice versa for the other ones. Lastly, previous candle high or low. It could be daily high, low, monthly, session, wherever your liquidity is resting, or even London, Asia, etc. The most reliable near-term target. Yeah. Identify the signature correct and get taken almost every time. Guys, what the markets basically do is just take liquidity out and liquidity. Look, market always does this. Take out the liquidity and then it must take out the other liquidity. Take out the other liquidity, take out the other liquidity. You get the idea, guys. It's all liquidity. And just all you need is the piece of pie. All you need is maybe a little entry here till maybe here. Or here till this up here. This is all you need. You don't need to trade multiple times a day. One, max 2 trades a day is enough. Reading higher time frame narrative with sequential SMT. A bullish monthly sequential SMT sets the narrative bullish. Every bearish daily or 90-minute sequential SMT after it shall be treated as a retracement, not a reversal. Wait for the bearish sequential SMT to fail. True change delivery, then enter long. The bearish sequential SMT becomes draw for retracement targets and entries when they fail. What they simply is take a picture, look through higher time frame, whether we have a bullish monthly sequential SMT, or to set the narrative bias, right? And also daily, also 90-minute. Guys, just look at all the time frame, look whether liquid sequential SMT or any SMT we have any cracking correlation, because it's really important. Like the most important to me, the most important thing about whole in trading industry, let me be honest, like SMT is really important. Like without SMT, I do not enter. You guys know that. Like the most important thing I watch or pay attention to is the SMT, whether monthly, daily, 90-minute, whatever. I pay attention to SMT because whenever they fail, let's say we have SMT at this high. Whenever market took out this highs, then we need to form another SMT. We probably have to form another SMT here. Whenever market wants to, go lower, we probably form the SMT, and the market is going higher is maybe because we have SMT. Guys, train your eyes and you will always see this. The SMT market structure shift. Any lower time frame sequential SMT that opposes the higher time frame narrative is an SMT market structure shift. If you don't know what market structure shift is, it's basically a change state, which the market, let's say we're in a bullish scenario or bullish bias, right? Let's say we're trading higher, right? And whenever the market tends to change its state, change its bias, so to say, this is our market structure shift or change state. And then markets tend to go lower, take out the liquidity. This is change state. The market is changing its like structure, so to say. And where are we? Yeah, use it to find where price is likely to retrace to. The PD array forms by the higher time frame sequential SMT, then look for any longs from there. Yeah, or the vice versa. Let's say it is. We need to form change state. Whenever we have SMT, this is good. And let's say we form PD array such as gap or breaker block, mitigation block, let's say 50%, and we're trying to go long. Look for some longs. This is basically the A plus setup. This is all you need. Guys, you have to know first. Know where price is going before you look for an entry. And some days the market you may not know what the market will do, right? If you don't know what the market, let's say market opens right here. You don't know whether you're bullish or bearish, right? Where you can say, you know what, I want to move with the market today. I'm not sure. We could be bullish and bearish, but the only thing that will confirm is when the 930 open here. Let's say mark 930 open, we trade below, check out the sell side. Now you don't want to keep going shorts. We already took out the shorts. Whenever we have a opportunity to go longs, you will then look for some longs and target the highs, and vice versa. The entry is the easiest part. That is true, guys. The narrative is the work. Most traders skip it. That's why most traders lose. Hope you got something from this, guys. Let me know what your thoughts are. Leave a like, subscribe. See you guys next time. Be safe.